I'm Philip Stoughton. I'm at Productronica 2025. I'm on the booth of the Global Electronics Association, and I am joined by Shaan Tharani. Always a pleasure to chat to you, Shaan, but it just seems so pertinent right now. There's so much going on in the M&A market. How are you seeing things?
Indeed, yeah. First of all, Phil, thanks for having me. Always a pleasure to be here. Love to be at Productronica. It's a great show. Coming to your question, honestly, we started off January 2025, slow starts, but honestly, the engines have been put into ignition, roaring, and since approximately March, April, I want to say the race is really on.
Yeah.
And what I mean by that is if we just look at the European EMS market, there's been a lot of movers and shakers. And I want to talk about the movers. So let's talk about three big ones, for example. The big one, everyone's talking about them, is Cicor.
Yeah.
Based on my ranking on the European players on revenues, Cicor is like starting around at 11th, 12th in my ranking of the top players by revenue. And through the acquisition of Mares, giving them Spain, buying parts of Airline, giving them France and I believe Morocco it is, or Tunisia, and then scooping up then Valtronic, parts of it as well, giving them Switzerland and Mercury, enabled them to then uplift themselves in the turnover and placing them within the top 10.
Yeah.
And like jumping them along the ranks.
Yeah.
So I think what they're doing is buying smaller targets.
Yeah.
That's their game plan. If it's correct, let's see. Time will tell.
Yeah.
But then they're also getting pockets of mission critical end markets, enabling them to leapfrog.
And locations.
And locations. So locations, proximity to customers and whatnot. So that is very special. So for those of you who are not doing any M&A, it is important to see how Cicor is rising the ranks through not organically, inorganically. That is the first part. The second part is, as we all heard yesterday, Cicor put in a revised offer to acquire TT. Now, based on my knowledge, if TT is around 450 million or even 500 million top line, right? Taking that 500 million, if the board accepts it or the majority owners, DBA advisors accept TT's offer, the offer of Cicor, to acquire TT, that means we're putting 750 plus another 500, so at 1.25, 1.3. That means it leapfrogged all the way to second place behind the family Zollner, which is making like a 2 billion plus, taking over GPV, pushing GPV down. Because this year, let's be honest, GPV hasn't made a move yet. So we're all waiting to see.
Had a fairly conservative year in terms of top line as well.
Exactly. So while they did increase the margin, GPV, they haven't done any acquisitions, so they're only growing organically. That is great, but still acquisitions are needed, and we see it. So that is the first one in terms of the race is on. Coming up the ranks.
In the race.
The second in the race is Scanfil, so to speak. Why Scanfil? So they bought SRX Global, giving them a footprint in Malaysia and Australia. They bought then Atco, giving them a footprint or extending the footprint in America.
In the US,
And then a big ticket is MB Electronica with 100 million of sales. So what they did there is not only international exposure, but getting into aerospace and defense where they weren't in there. Critical area that everyone wants to be in right now. So with these three acquisitions, they pumped up a revenue of 160 to 170 million, making them the largest publicly listed European EMS player. Wait for it, until October.
I was going to say until last month.
Until October. Because what happened then? So they went up again. So again, movers and shakers in the whole ranking system of EMS in Europe. And then what happened? And you know what I'm talking about.
You were talking about Hanza, our friends at
Exactly.
Hanza.
I didn't see that coming. I've been in contact with BMK. I didn't see that Hanza would swoop them up. I wouldn't have guessed if I had to bet $1, it would have been Hanza. But Hanza went, acquired BMK. BMK makes approximately 400 million, plus minus, and with that, they just, through that acquisition, they just went to 900 million top line plus, approximately, making them now the largest EMS player that is publicly listed. And so Hanza has this called Links program, where they want to get a good, stable, balanced production footprint across Europe. And they're doing that. So now they're with Germany, they have a stable footprint in one of the largest industrial markets, right? Good customers, A-class customers. Then they got the Baltics, they got so-called Poland and other Eastern Europe. and they're good in their so-called Nordics region. So that gameplay is being a pan-continental European EMS player, focusing not only on PCBA, but also on electromechanics. So that's a differentiator there. And so with that, they really hit it big and brought it home, and now they're so-called up there in the ranks.
Yeah, absolutely. And that's 3 really big moves in the second half of the year that we've seen. I really like what Eric and the team at Hanza are doing, and one of the things I like about it, and you talked about adding those end markets, you talked about adding geographies. One of the things that Hanza's had as part of its DNA is adding vertical integration into every business model.
That is a differentiator by Hanza.
It's a huge differentiator, but what it does mean is when you acquire something like BMK in Augsburg that has ostensibly SMT, PCBA, and some box build, you have a big expansion potential there by adding sheet metal, by adding plastics in that region, so you can deliver more. I'm just feeling that this billion euro threshold is going to be broken through by more and more companies. We had kind of 1 in there on their own, and then we had 2 in there. I thought maybe, 18 months ago, I thought Catec were going to be the 3rd. That shooting star kind of didn't get to where I expected it to, but it feels like we're going to have many more in the race.
So I expect at least till the end of this year, maybe 1 or 2 more transactions taking place. If they're big, I don't think so, but they're going to be substantial in terms of what the market will read out of it. Who knows? Maybe in the next 24 hours, it might be a deal as well. Let's see. But we always surprise, who suddenly says, "Oh, I acquired X, Y, Z." But coming into 2026, I don't think this momentum is stopping.
No.
I see a lot of people thinking about selling. I see a lot of people thinking about making big moves. I think next year there'll be one more game changer, so to speak, and that will pivot. Aside from those that are trying to reach a $1 billion mark by 2028 or earlier, there'll be one more big move expected in 2026. So I hope you watch out for that.
Yeah, of course.
And see what happens for this.
Yeah, I'm fascinated. But when you look at the dynamics, when you look at and we've talked about this before, when you look at the key reasons to have this acquisition strategy, those 3 factors of geography, end markets, and the vertically integrated technologies or the services you offer are really, they're really valuable starting points, aren't they? In terms of scooping up businesses that you want. You want to get an extra market from it. You want to get into a new geography.
Those 3 overarching rationales are always there and always present. How you play within them is your own configuration. And that is what each leadership is taking into consideration. So we take Hanza, they're playing not only, it's important for me to get aerospace and defense, so I don't just buy Amadeus, who does maybe PCBA, but I buy Melectra, which is in Finland, high-cost country, but then I'm doing larger dimension products and doing more, less PCBA and more box build, taking wires, taking metal, and putting them together and creating something. So within those 3 buckets, as you said, there are different playbooks. And then within that, again, you see Scanfil looking for internationality among end market exposure, whereas Hanza looking more pan-European lens and also end market exposure. So the 3 dimensions that play out are always important, and it's just a different of how you find the right balance and what is your strategic playbook. And that's where I come in to help those who have leadership visions to try and put the missing pieces of puzzles together, so to speak, in order to configure the right strategy for your company, because it's not always the same. Those over 3 arching ones are the same, but within that, there's a big differentiation. And if you do one piece wrong that doesn't fit to you, then it can be a game changer or a game breaker.
Yeah, absolutely. It can be a big disaster. I think what's really interesting is that you don't just look at those 3 factors, you look at other factors as well. And it's not just thinking about the deal and how you get to the deal, it's thinking about what happens afterwards and integration. And you've got to look at those companies. You've got to think about Hanza, you think about Cicor, you think about Scanfil. There are certain cultures within those companies that are unique. And there needs to be a little bit of a culture match and not a culture clash for those acquisitions to be successful and the integration to be as smooth as it can be. It's always challenging.
So there are two levels, right? The first one is post-acquisition, finding the right target, understanding what fits to me, right? And that's where I played the main part. Yeah. And then, of course, deal making, getting it across the finish line between buyer and seller, aligning mutual interests. Yeah. Then after that, what's important is, given that I understand that, helping the client out post-transaction to see how they can integrate it in a seamless manner and profit from it. Yeah. Not take anything away and destroy value, but add value. Yeah. Not only for them and their top line and bottom line, but for their shareholders. Yeah. Because at the end, most of these companies we're talking about are publicly listed. Yeah. So they have to report on an earnings basis quarterly to their shareholders and deliver value. They've got to perform. And I need to deliver value for them, and they need to deliver value for the shareholders. For their shareholders. And it's exactly what we talked about with a company like Hanza. The way they're going to get even more value out of that BMK acquisition is to think, okay, well, once that's in the Hanza family, what platform does that give them as a Hanza facility to actually grow their footprint? So you're funneling more services under the BMK customer portfolio to the wider market and getting more share of wallet. Yeah, that's the whole game plan. It is fascinating. And I mentioned briefly the idea of the cultural fit, and I talked extensively with Marcus Zollner recently after the small acquisitions they made, and they're basically a family business acquiring family businesses from maybe a first generation that's aging out or those kind of situations. How important has culture or operating culture become as part of the way these businesses are growing? That's a good point. As this business is also a lot of human relationships, especially on the ground with selling to customers in the proximity of a certain range. Culture plays an important element. And there are two cultures here. The first one is the culture of how the company is built, and the second culture is who owns and runs the company. And if it's run by a private equity and financial investor, that has a different culture, not saying it's a bad culture, it's a different culture than someone who's maybe family run. And both have its plus and minus. From the financial investor side, it's probably more professional, better reporting standards, and easy to track and trace and hand over. Whereas in a private family-owned company, it's more emotion. It is usually done more intuitive often. Intuitive, and decision making is not mainly based only on any metrics, but on gut emotion and what's right for the family, and that's where they've done that. And explaining that to someone who looks at the business and analyzes it before acquiring it, it doesn't sometimes always make sense. So that is an intricate part, aside from the price and the terms and conditions, that play a factor post-integration. Of what you do. No, absolutely. Last thing, I've spent the last 12 months, as I look at these different acquisitions, thinking what is the ideal EMS model for the dynamic, disrupted world we're in. I've come to the conclusion there is no one model. Exactly. There are models that I really like, and it's because they're unique. As I mentioned, Hanza's vertically integrated model. I like what other companies are doing for different reasons. Focusing on specific regions, focusing on particular markets. It isn't a one-size-fits-all, is it? There is no one game book that you can buy and play out, and you'll be successful. There are many success factors. You have to understand what are your core ingredients. And if you take too many ingredients into your bowl and mix them up, it's just a mess. It's a mess. And that's what we've seen probably in the past. However, those who are smart and understand and have a strategy and a vision, and they understand where's my playing field, how do I want to play there, and it doesn't mean that you have to always be in aerospace and defense. You can exclude that part and focus on the medical only or something else. And there's no one size fits all. It's not cookie cutter, and that's what's very interesting. We'll see how all these acquisitions play out in the future, aside from ranking, of how well integrated everything will become, and then the synergistic effects of it. And that's going to be an interesting part of 2026. Definitely. I'm sure you're absolutely right. The race is on. Having the right people on your team, having the right people to support you in that race is really valuable. I would recommend anybody that's listening that hasn't reached out to get in touch and have a chat with you. You're always accessible. You're always easy to talk to. And thanks so much again for your time. Thank you.